Technical analysis. A technical analysis believes that the share prices are determined by the demand and supply forces operating in the market. A technical analysis concentrates on the movement of the share prices. He claims that by examining past share price movements, future share price can be accurately predicted. The basic premise of the technical analysis is that prices move in the trends or waves, which may be upward or downward. Technical analysis can be defined as an art and science of forecasting future prices based on the examination of the past price movements. Technical analysis is not astrology for predicting prices. Technical analysis is based on analyzing current demand, supply of commodities, stocks, indices, futures, and or any tradable instrument. The basis of technical analysis. What makes technical analysis an effective tool to analyze the price behavior is explained by following theories given by Charles Dow. Price discounts everything. Price movements are not totally random, and what is more important than why? Price discount everything. Each price represents a momentary consensus of values of all market participants, large commercial interests and small speculators, fundamental researchers, technicians and gamblers at the moment of transaction. That's the word of Dr. Alexander Elder. Price movements are not totally random. Technical analysis is a trend following system. Most technicians acknowledge that hundreds of years of price chart have shown us one basic truth: price moves in trends. What is more important than why? It is said that the technical analyst knows the price of everything but the value of nothing. Technical analysts are mainly concerned with two things: the current price and the history of the price movements. Technical analysis is the basic assumptions. The field of technical analysis is based on three assumptions. First one is the market discount everything, price moves in trends, and third one is history trends to repeat itself. Strength of technical analysis. Not just for stock. Technical analysis has universal applicability. It can be applied to any financial instruments, stocks, futures, commodities, fixed income securities, forex, etc. And the strength is focus on price. Fundamental developments are followed by price movements. By focusing on the price actions, technicians focus on the future. Supply, demand and price actions. Technicians make use of high, low and closing prices to analyze the price action of a stock. Support and resistance. Charting is a technique used in the analysis of support and resistance level. These are trading range in which the price moves for an extended period of time, saying that forces of demand and supply are deadlocked. Methods of technical analysis. First one is trend. According to Dow theory, the trend is divided into primary, intermediate or secondary, and short term or minor. In primary trend, the secondary price trend may be either increasing or decreasing. When the price exhibits the increasing trend, it is called as bull market, and when it exhibited the decreasing trend, it is called as bear market. In the secondary trend, the intermediate trend moves against the main trend and leads to correction. The correction would be 33% to 66% of the earlier fall or decrease. Compared to the time taken in the primary trend, secondary trend is switch and quicker. In minor trend, it is also called as tertiary moves and also called as random wriggles. They are simply the daily price fluctuations. Minor trend try to correct the secondary trend movements. Support and resistance level. In the support level, the fall in the price may be halted for the time being, or it may result even the price reversal. In this level, the demand for the particular script is expected. In the resistance level, the supply of script would be greater than the demand. Indicators is another method, in that the volume of trade. Volume expands along with the bull market and narrow down in the bear market. Technical analysts use volumes as an excellent method of confirming the trend. Breadth of the market. The net difference between the number of stocks advances and decline during the same period is the breadth of the market. A cumulative index of net differences measures the market breadth. Short sales. This is a technical indicator also known as a short interest. It refers to the selling of shares that are not owned. They show the general situations. Oscillators. Oscillators shows the share price movements across a reference point from one extreme to another. The momentum indicates overbought and over conditions of the script or the market, signaling the possible trend reversal. Rise or decline the momentum. Relative Strength Index or RSI is another method or technique. RSI were developed by Wells Wider. It identifies the inherent technical strength and weakness of a particular script or market. RSI can be calculated for a script by adopting the following formula. RSI is equal to 100 into 100 divided by 1 plus RS. RS is equal to average gain per day divided by average loss per day. If the share price is falling and the RSI is rising, a divergence is said to have occurred. Divergence indicates the turning point of the market. Rate of change or ROC. ROC measures the rate of change between the current prices and the price n numbers of days in the past. ROC helps to find out the overbought and the oversold positions in a script. ROC can be calculated by two methods. In the first method, current closing price is expressed as a percentage of the 12 days or week in the past. In the second method, the percentage variations between the current price and the price 12 days in the past is calculated. Advanced decline line. It is a stock market technical indicator used by the investor to measure the number of individual stocks participating in the market rise or fall. As price changes of large stock can have disproportionate effect on capitalization, weighted stock market indices such as the S&P 500, the NYSE Composite Index and the Nasdaq Composite Index, it can be useful to know how broadly this movement extends into a larger universe of smaller stocks. Chart patterns. Charts are graphic presentation of the stock prices. These also have the following uses. Spot the current trend for buying and selling. Indicate the probable future action of the market by projection and show the past historic movements and indicate the important areas of support and resistance. Point and figure chart. These charts are one-dimensional and there is no indications, time or volume. These price changes in relation to previous prices are shown. The changes of the price direction can be interpreted. Bar chart. The bar chart is the simplest and most commonly used tools of a technical analysis. A dot is entered to represent the highest price at which the stock is traded on the day, week or month. And the dot is entered to indicate the lowest price on the particular date. A line is drawn to connect both the points. And horizontal knob is drawn to mark the closing price. Triangles. The triangles formation is a easy to identify and popular in technical analysis. And the different triangles are symmetrical, ascending, descending and inverted.